Hello folks, my name's Eric Wilkinson. It's Thursday, December the 9th, and we've got a lot to go over, a lot of levers and pulleys going on, not necessarily in the form of economic data, because I usually talk about the economic data, the geopolitical environments, how that impacts the overall markets with some of my market analysis. Well, I do the same thing in these daily market commentaries, but I go a little bit further for you folks and talk about the option strategies I'm implementing into my portfolio based on those assumptions I come up with through that market analysis. Now, without further ado, let's get on with that economic data. Across the pond, really not a whole lot to see, but just north of us, if you're keeping an eye on Canada, Bank of Canada overnight rate left it unchanged at a 0.25% or 25 basis points. Now let's talk about the United States. We got wholesale inventories. That came in at a build of 1.1%. It was supposed to only build about 0.9%. Now, this number is a little bit wanky. Why? Because, we're heading into a holiday season. So we would expect that these manufacturers are going to build inventory, right? Well, we also would have expected last month they would have moved a lot of that inventory. And it seems like they're building more than they are moving. And we should have probably started seeing that start to happen relatively soon. So not a good thing seeing those wholesale inventories build, because it kind of leads one to believe that people aren't going to probably be spending so much. Now, even further exacerbating that problem is we've been talking about getting a stimulus package through before the end of the year. Well, it seems like the Republicans went with a pretty skinny package. Not everybody would be getting a stimulus package, but they would have increased the unemployment benefits, some PPE to some of the smaller businesses around the United States. And that failed to go through. The Democrats really digging their heels in and saying no. I don't know why, but it just seems like that is a bit of a conundrum there. I'm really surprised. I thought something was going to go through. Anyway, moving on with the economic data, we got jobs openings coming in at 6,650,000. Expected to be 6,300,000. Now that's good. It means people are actually looking for people to come back to work. And obviously we have over 10 million people unemployed. Not going to fulfill all of that, but you can see that ramping up people opening up jobs is good, especially with the lack of PPP stimulus. All of those things would probably deter business from hiring, but it seems like they are looking to fulfill some of those job openings before the end of the year. Remember, at the end of the year, that's when a lot of companies have budgeted for next year's hiring and are starting to do that in this month, and that's what we're seeing there. Well, we also have a bond auction later on today, but finally we got crude oil inventories, a build of 15 million barrels. It was supposed to be a drawdown of almost a million. Now that is massive. We're not seeing a dent in crude oil right now. Now, some of the minutia inside of that number, we also saw that gasoline was a build of 4 million barrels, 4,220 barrels. It was way over what was expected there. Distillates, a build of 5,222 barrels or million barrels. And Cushing was a drawdown. Now that is basically inventory. We're seeing some of that inventory drawdown. Why? Because the production ramped up to 11 million barrels a day. Now, something to keep in mind there, with all of this going on in and around these numbers, the production number is really the key there, because they're moving that Cushing, they're moving the raw crude oil and breaking it down into distillates, gasoline. That's why we're seeing those buckets get filled up as well, but not able to keep up with the inventory build that we're seeing there in crude oil. Some people were saying, is that a typo? Because it was such a massive build on the other side. And that could be why we're seeing a little bit of buoyancy to crude oil, as people are kind of waiting around. Hey, is this a bad number? Is that decimal in the wrong place? So I think that crude oil is trying to, act like they didn't see that number at this point anyway. So we're going to keep an eye on crude oil. I almost shorted that right off the bat as soon as I saw that number, but held off on trading futures, as I am a recovering futures trader, right? All right, so gold is falling off. Why? Because that stimulus package did not go through. That is a main catalyst for crude oil, for gold futures coming off. We've talked about this about, it feels like for a month now or more, that if that stimulus package goes through, that should weaken the dollar, give strength to these dollar-backed assets. Now with that stimulus package not going through, we're seeing that weakness here in gold futures. So not going to get up there to that 1900 or break above that 200-day simple or 50-day simple moving average that I was talking about yesterday, quite in depth, I believe. Falling up against that value area high, getting a little overextended possibly. Well, I expected us to peel through that, start going up and testing that 1923, get back into that 19 handle. With the results out of the stimulus package, that's not going to probably be a case. Bonds, they're down 20 ticks on the day, but we've gotten back above this 50 Fibonacci and back towards that point of control. So we could settle down there. I do believe that the risk in the bonds is to the upside still, because I don't think that interest rates are going to go anywhere anytime soon, and that should lead this market a little bit higher here. Now, VIX, we are getting a little bit of a move. We've got a couple of wet blankets thrown on us today in the markets. We can see the Dow Jones Industrial Average off by about 68 points on the day as of right now. And that is having to do with the stimulus package not going through. Another thing we saw, I forgot to mention, was Pfizer. Pfizer did those mass inoculations yesterday, basically giving the vaccine to people in Britain. What they noticed was if you have a immune deficiency, or if you have allergies, a lot of allergies, then you probably should not be taking the Pfizer vaccine. It really was affecting those people negatively. That has caused the overall vaccine euphoria to come off a little bit. That's affecting the equities here, as we'll be seeing across the board. We can almost nail it down to the timing of that announcement. And here we go with the NASDAQ off by about 40, coming back into this trend channel, which is what I'd like to see. I've talked about this. I'd like to see a nice even, or maybe less of a vertical move that we saw coming out of the pandemic, to kind of settle this market down and create a nice strong move to the upside. Anytime you get those massive vertical draws, it makes one believe, or at least for me, being trading for 30 years, that the market is due for a big correction. But when you get those bounces back and forth, that's a little bit more healthy in my eyes. And let's look at the breakdown of the E-mini S&Ps 30-minute chart right here. Basically, Pfizer coming out and announcing that there was a lot of people having difficulty with some of those vaccines if they had allergies, and that has caused the overall markets to start correcting there. Plus, we, on top of it, at around the same time, we also got the news that, hey, you're not getting a stimulus package before Christmas. That weighs on the entire market. Not only does it hurt the consumer, it also, they aren't going to be spending at this holiday season, especially if they were unemployed or worried about their jobs still. And with this Pfizer news, that is going to be in jeopardy as to how this economy is going to recover going into 2021. All right, so PENN, something about this, another new high. I mean, I love to mention that. Remember, I got short 90 calls in there based on my long stock position. So basically just putting on covered calls at around the 90 strike. Today, creating another high. It was looking pretty weak as the broader travel and leisure was really negatively affected by this Pfizer news. I mean, we saw a lot of the gaming stocks go down, a lot of the hotels coming off. Well, PENN at the same time was just blasting off to the upside, making a nice big rally, breaking into the 80 handle. Again, we're looking at this type of chart setup. To me, it looks like we are looking at a bit of a topping pattern here. With this setup, if I can find my pen, sometimes when that little thing pops up. I don't see it right off the bat very easily. But anyway, we're talking about this topping pattern right up in here. This candle in particular is making it look a little bit toppy. Now, if we get a correction or a print on the downside, that is going to be something that we're going to be keeping an eye on. And I just found my pen. There it is. So what we're talking about here is this setup right there. You know, obviously we had a big rally, and that even makes it more. I mean, we've got a nice big candle there. Now we've got a candle that's kind of looking like that. And to me, that is a top, possibly, that we're going to have to keep an eye on. We're going to be looking for what this next candle is here. If it breaks off to the upside, then it's going to be a broken pattern setup. But to me, setting up right in and around that high, that looks like this market wants to come back down to at least 70 going forward. So I only have about 9 days left on these covered calls. Obviously, I haven't taken them off. I had an opportunity yesterday earlier on in the day, right off the bat in the morning. And then we got that big rally. So those covered calls kind of were not able to take off for a nice little profit there. But still going to ride that out. Call it away from me at 90. I'll be happy. But I feel like this market might have a correction in its very near future, at least for a couple of days. That'll get me out of the woods on those covered calls, and I'll be able to try and roll those calls out and up in on a strike, out in time and up on a strike. Continue to increase that width of that spread, lower the overall cost base to stay mechanical with this trade. All right, and then moving on to Pfizer, you can see on the Pfizer news, that really is throwing a wet blanket on them. With even though making an all-time high today, everybody was really elated for that, and then the news started coming out, and we started seeing this market sell off again. And finally, let's take a look at Lulu. Lulu was looking to make a big move to the upside here. I thought we were going to go up and test those all-time highs earlier on the day when we were near the high. It looked like we had found a little bit of a bottom. We're going to start moving to the upside, maybe test that $400. Not looking like that as of right now, but it's something to take a look at as well. Is not Lulu, LUV, I think is actually what I wanted to put in here for some of that, was seeing the travel industry really start to suffer here. I haven't taken a look at Disney, but we could take a look there as well. You can see that they were celebrating the vaccine. People would be able to get back out, but then we started hearing this news, and like I said, travel and leisure really struggling today. A lot of stocks across the board not doing so well, but travel and leisure probably being hit the hardest at this point in the day. So with that being said, I haven't been able to cover anything. I didn't add anything, but I am looking at a couple of different stocks that I'm waiting for the setups to really become a little bit more clear. I feel like we've gotten a little bit frothy. We're not getting the stimulus. We're seeing these inventories build. I don't think people are spending as much as was predicted, and that should maybe make these equities come off. So I'm looking for a little bit of a correction here going forward, maybe into next week for the equities. All right. So that's it. I'm just keeping an eye on everything I've got going, but at this point in time, I haven't taken anything off or added anything. I am really digging through charts left and right, trying to find something in the tea leaves there. But at this point, like I said, I haven't found anything, so I'm going to kind of sit on my hands. Sometimes it's better to sit on your hands than really dive in. All right, so that's all I got for you guys. Please take a moment to go over our disclaimer, as we're an educational company. I'm not trying to get you guys to limbing off with the cliff with me, so make sure you read over this, know your risks, know your reward, know what you're getting yourself into. That's all I got, other than if you can't take, if you can't take that, take it easy.